Welcome to Complinet Global Newscasts. News featured is taken from Complinet Complete, our news, analysis and tracking service, and your comprehensive view of the regulatory landscape. In the US this week, the Federal Deposit Insurance Corporation barred the state-chartered banks it supervises from using automated programs to process checks in ways to maximise the bank's overdraft fees at their customers' expense. The FDIC overdraft payment supervisory guidance would curtail the practice of processing a day's largest payments first, rather than chronologically, in case smaller but earlier overdrafts incur the imposition of multiple penalties. When a customer is charged each time for overdrawing an account more than 6 times within 12 months, the FDIC said the bank should offer the customer less costly alternatives, such as a linked savings account, a more reasonably priced line of credit, or a safe and affordable small dollar loan. The FDIC warned that overdraft programs found to pose unacceptable safety and soundness or compliance risks will be factored into examination ratings and corrective action could be taken. A former executive at a specialist waste weighing company faces prison after his conviction on 9 insider trading and money laundering charges, following a prosecution by the Financial Services Authority. The verdict against Neil Rollins represents the regulator's 7th successful insider trading conviction. We are now joined by Complinet's Martin Coyle. Martin, what were the circumstances in this particular case?
Well, Neil Rollins was a senior manager at a waste weighing company called PM On Board, which was part of the PM Group, and he sold 90,000 shares in the company during a closed period. Now, he said that he was not going to sell them. He was going to sell them anyway, but it was illegal for him to do so at that point, and a jury found him guilty.
So it looks like the FSA is really cracking down on insider trading.
Well, they are, and this is their 7th conviction for insider trading, so the momentum continues, but still remains to be seen whether they can get a big fish and whether they can get city professionals convicted for this. And next year, perhaps, there's some cases in the pipeline, so perhaps we might see some more instances and some more cases.
Thank you, Martin. Regulators and those operating in the Islamic finance market should seek to promote market links through bilateral or multilateral arrangements which facilitate cross-border transactions and standardisation of regulatory and governance frameworks, according to Raja Maimuna, Global Head of Islamic Markets at Bursa, Malaysia. Raja made her observation at the World Islamic Banking Conference, which was held in Bahrain. She said that if these issues were not addressed, the highly fragmented nature of the Islamic finance market and the lack of market integration would continue to hamper Islamic finance's ability to present itself as a viable alternative financial market. She told delegates, products not accessible across the markets and the absence of a uniform regulatory framework and price opacity further dissuade participation from non-faith-based players. A more connected or integrated market that bridges the resources of the Middle East, Asia, Europe and Africa would not only facilitate access to a wider range of Sharia-compliant products, but would also encourage product development and diversity, price transparency, and perhaps more importantly, liquidity. And finally, a host of new regulatory reforms, driven both by international forums such as the G20 and by domestic issues such as the Dodd-Frank Act in the US, will present the world with a number of challenges in the years ahead, according to Hong Kong's top securities regulator. Martin Wheatley, the Chief Executive Officer of the Hong Kong Securities and Futures Commission, told the Pan-Asian Regulatory Summit, organised by Thomson Reuters Complinet in Hong Kong, that the new regulatory reforms were being driven by a never-again mantra at the political level in the US and Europe. For Asia, he said, this presented a unique set of challenges as the region, riding on lessons learnt from the Asian financial crisis in 1998, had come relatively unscathed through the more recent global financial crisis. The Never Again mantra had translated into a number of different reforms, he noted. Key among these reforms were an effort to broaden the perimeter of regulation, bringing previously unregulated products and activities within the regulated sphere, addressing the too big to fail issue and balancing domestic needs against new international requirements. To read about these or any other stories from Complinet in more depth, please log into complinet.com or contact us if you would like a free trial. Join us next week for another newscast from the Complinet Global News team.